What is up, Zinger Nation? Welcome back to Pre-Market Prep at the close. I'm producer AB filling in for Mitch today. Thanks for everyone hanging out. I've got Joel hanging out in the background. We've got a fun show planned for you. Fun little 30 minutes. We're going to be talking about, of course, this huge winter storm going across the country. Flights getting canceled across the board. We're going to take a look at the Jets, ETF, and some other airlines. We're going to look at some Chinese names that are down with COVID numbers. A great day in energy. In the energy trade here in the United States, we'll take a look at that as well. So producer AT, without further ado, let's go ahead and roll that intro and bring my man Joel on when we come back.
All right, it is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Mr. Joel Elconin, how you doing today?
I'm trying to stay warm out there. Let's run down the futures and the commodities, and then talk about the weather, right? Because that's the only thing to talk about. Besides this market trying to finish green today. S&Ps, we made a new low this morning through the pre-market low. Things were looking bad, but the bulls came to the rescue. Made a new high, but not by much. Now we're just kind of leaking back to, we're well above unchanged, but up 10 and a quarter handles at 59 and a quarter. Quiet day for the buck. Let's see, inside day on that. So we'll look for the little move either above the high or below the low. We'll see. The dollar's been quiet. 30-year bond down a point and a quarter at 127 and 6/32. Took out a pair of lows. Crude knocking on the door of 80, but got to 80.33, up 212, 79.61. As AB mentioned, helping out the oil stocks. Gold ending the day up over 1,800, up 870 at 1804. Silver doing better on a percentage basis. That's up 29 cents at 23.92. Boy, Bitcoin, $200 range, up $60 at 16,795.
Yep, Joel, thanks for running us through those indices there. The big things that stick out to me there, the USO, whether you want to look at the crude prices, XLE, we're looking at the USO, the United States Oil Fund here, up 2.3%. Why are we up so much on energy, but the rest of the market isn't tagging along?
I mean, I don't know why we're going into recession. Who's going to need crude oil and natural gas? I mean, the way that we've been setting up this week is that, yeah, you're going to have a selective Santa Claus rally, but it's the stocks that got us here this year. The value stocks, and that's where the oil stocks come in. So more of just a continuation of the trend, which worked this year. ExxonMobil having a great day, getting back to an important area. We are now in the area of 4 highs. I don't want to call it the quad top, but 108.50 area. That's big. And I think I gave the 50% retracement of the move from the recent high to recent low, but you guys have to figure that out on your own. CVX, I thought it could see 175 today. Well, it did a lot better than that. It's trading up, boy, $5 at 177.13. What about Warren stock? Let's see. Occidental Petroleum. Hey, traders, keep your eye on Oxy tomorrow. I don't know what's holding it down, but we got a triple top here, just under $64. You know what will happen with that one is you won't go long, and then you'll find out, oh, Uncle Warren came in, bought the dip, and the thing opens at 66.5. But that's a look at Oxy. As you mentioned, the XLE, I briefly looked at that chart. That's in a really important area too. You're right. You're not quite at the area of 2 or 3 other highs, but let's keep an eye on this $87 area. Quite a few highs for that in the XLE.
Yeah, and I mean, going back to Oxy real quick there, let's go to that chart real quick, Joel. It does look to me, and I'm not, no technical, wizard. You've got these 3 tops up here where you've failed to break out, failed to make new highs. And then you've got that kind of gap fill on the upside that would bring us back down to around like $43. I would just be if you're in Oxy watching for these levels here, what would be some of your key levels here, Joel?
You said 43?
I'm saying on this gap fill to the upside. I'm not saying I see it coming down to 43, but that's where on March 2022 you kind of gapped up here, right?
March 22. We're looking at the same stock, OXY, right?
Correct. Yes.
Okay. Boy, I don't even have I don't have the March in here. You know what? I don't think that's going back down to March lows like anytime soon. I think you're going to need a total collapse in the oil market. I'm just looking at this from a breakout perspective. The stock has been in a long-term uptrend the whole year. I'm looking at more of a breakout above 64. Now, if you think it's going to 43 or short this area, it might be a good area to short it because you have those three highs to lean on. But I don't know, 43. I see the little gap that you're talking about. I don't know. That's just
No,
not
I mean
on my radar today.
I agree with you in the sense that if Oxy's going to 43, that's what a 33%. It's a third. That's cutting a third of it off right now, almost 33%. We're only going to see that if we do get this true 07, 08 type recession people are talking about, which I'm personally am not very convicted that's going to be the outlook of 2023. I understand why people are worried about it being a tougher year, but in terms of seeing that type of recession that would bring Oxy down there, I'm not that worried about it. I more was just saying that chart looks a little, the triple top doesn't look too pretty, but the more I'm looking at it, Joel, I will say you're making higher lows here.
Yep.
You're making higher lows over the last 6 months or so. And, if you've got the Warren Buffett stamp of approval, now you're talking me into it on the long side. So,
okay. I mean,
pretty,
if this thing goes to 43, Aaron, then we need to be hiding under our desk. That means the S&P is going under 3,500. It's going to 3,000. We're in a full-blown recession. Interest rates are at 10%. So not to be too hard on you here, but I mean, that would be a huge move. But if it's a low risk short, I'll give you that. Resistance is resistance till it's taken out. Maybe there's some big size in there in the New York book. But that's the way I'm looking at Oxy, OXY.
There we go. Well, let's go back because I mentioned at the top of the show we were going to mention kind of this weather storm. I don't even know what they're calling it these days. Is it a polar vortex? Is it the cyclone bomb or whatever? But gotten real extreme weather in all across the country in areas that aren't used to getting cold weather, whether it's down in the panhandle of Florida, Atlanta, but thousands and thousands of flights getting canceled today, Joel. Looking at the Jets ETF, I was actually surprised to see this in the green today, up about 0.3%, so pretty flat, but in the green nonetheless. I guess the market doesn't care about these flight cancellations.
I mean, they're going to get the people out, right, today or tomorrow. I guess it's good that you have the actual Christmas day on Sunday, so you got another day to get them out. I mean, the chart's not looking good on the Jets ETF there, JETS, Jets. You're hanging out above the low of the move, not by much. You got an inside day. Higher crude oil prices certainly is not good for this, but just an inside day. It's up on, I guess you could theoretically say it's trading up on bad news, right, that all the flights cancellations, but just hope people will be getting safe there for their holiday travel. Looking at Delta, I mean, they're just hanging above the low. Got a pair of lows here at 32.29, 32.37. That better hold. We mentioned the resistance at 34. UAL, United Airlines, same thing. Small inside day, hanging above the low of the move. Love, Southwest Airlines, all the same thing here. Inside day. I think maybe if it like really extends and like they have to cancel a bunch of flights on Saturday and then people don't get home for Christmas on Sunday, you might have. But they've had a tumble, just like the market, having a hard time recovering. Just hanging out near the recent lows of the move in a lot of these airlines.
Yeah, I think like you said, Joe, bottom line, the flights, the people that bought tickets will probably still get on those planes, whether it's today, whether it's tomorrow. The Jets ETF. So Joel, if you had to own, and again, this isn't investment advice or anything, but if you had to own one of these airlines, looking at the charts, which one would you own out of Delta, Love, and United? We'll go the big three.
Well, it is not going to be based on the chart. It's going to be based on my customer experience over the last 6 months. And I don't want to jinx myself, but I have nothing but incredible travels on Delta Airlines. I mean, that the service, the on time. And I shared this with Dennis the other day. I recently did a trip, and I always like to talk to the stewardesses and get their feeling for what's going on. And I'm like, wow, you guys are busy, and how is it? And she's like, it's crazy. She goes, people are just they want to travel, and I think that's where people are spending their money. Maybe they're skipping a little bit on their Christmas gifts, but she told me, and I was doubted by the chat when I said this, but she told me that they are looking throughout the entire company, not pilots and mechanics, everybody. They're looking to hire 6,000 people.
Holy cow.
Yeah. So the demand is still there. Will Dennis's recession, squash, the travel? We will see. But I just think people they just want to get out. They want to do things. And so I would go with Delta here. Also, I just want to mention that these airlines just over the years have not been the greatest investments. Even if you look at pre-COVID, airline travels have not
Tough
been.
industry.
Yeah, it is.
Low margins. These companies aren't super profitable. So even if you pick the biggest winner in the space, look at Delta's air, any whatever, your favorite airline is, look at the chart. They weren't making new all-time highs when we were making new all-time highs in the market, pre-COVID. They were just kind of, well, actually Delta might have been, but I know Love for sure. Southwest was not.
No, I don't think Delta was. Let me go back. Oh, no, I mean, pre-COVID, this was up near in the 60 handle. Let me go back a little bit farther.
That might have been highs for Delta, but look at I have Southwest chart pulled up here. Southwest topped out in January 2018. So it's like, all right, if the rest of the market is making new all-time highs in 2020,
there you go,
and you topped out in 2018, that's getting me a little worried. Why aren't you, followed along with the rest of the crowd? But Joel, so you mentioned this is your inside info that you get collecting, talking to various flight attendants throughout the country. But that travel has been exceedingly hot area for people to spend money on. So why don't we take this natural segue from airlines to cruise lines? Do you think people are going to start spending more money at Carnival or Norwegian Cruise Line anytime soon?
Oh man, I'm not a huge cruise guy. Unless you're going to Alaska, you got to take a cruise to Alaska.
I've done that. I've been on one cruise, and that was one I've done.
Oh yeah.
Yeah.
What cities did you go to?
So this was for my grandma's 70th birthday. I was about 12 or 13. We went to Anchorage, Juneau, Sitka, Alaska. I remember that. We did some really fun, little activities every stop we were at. We went whale watching one day. We went up in a little biplane one day. Beautiful.
So that was about 5 years ago?
About 10 years ago. Oh, I see. You're doing a joke. You're calling.
These cruise lines, I mean, they are just CCL just keeps diluting itself and going after more and more money. I think the difference between these cruise lines and the airlines, at least when you're on an airline, whether you're a vaxxer, non-vaxxer, whatever, you can wear a mask, right? You can get off the airplane after 3 or 4 hours. The cruise, I think there's still a little bit of the, enigma of the pandemic. I mean, they work once again, these stocks. I mean, this thing made you talk about 2018. That was a great point that you made there. This made its all-time high in January of 2018, over $70. So is this where COVID, no COVID, you like cruises, right. You don't like cruises? Is this where you want to put your money? No, it doesn't look like it. So,
Yeah.
yeah, the cruise. They did their last offering, and I mean, it's trying to form a base. If I had to make a bullish case here for CCL, and I'll do that for our bulls out there, you had a gap between 768 and 747. You filled that. You filled that gap almost today when you got to 753. So maybe instead of looking left, look right. If you can establish 3, 4 more lows at the 750 area, you get a little bit of rally. But once again, stocks that didn't work in 2022, they're not going to work the last week of the year.
100% agreed. And I mean, that going back to that, topping out in 2018 thing, it's not to say that there aren't stocks out there that might do well, but it's to me, Joel, it's a clear sign that, look, the market was already not favoring cruise lines, right? There had to be some reason here for Carnival to be so out of favor while the rest of the market was going up. People were spending, I mean, look, from 2018 to 2020, the economy was great. People were spending money before COVID hit. Everything was, firing on all cylinders, essentially. Unemployment was the lowest it's been, going back to 08. And for some reason, these things were out of favor. And that, to me, maybe COVID just was accelerating the inevitable, essentially, in the sense that these cruise lines companies weren't that profitable, going out of favor. Whatever, I don't know from a fundamental reason, whether it's like the population just not as willing to go on cruises anymore, or what it is, but clearly out of favor. I'm not touching any of these down here, Joel. Even though that they are down now to their COVID lows. Carnival here, Norwegian is NCLH down here. Pretty similar charts looking there, Joel.
Yeah, just with the NCLH, and if you get bored, you want to do a little research over the weekend. There was an analyst, and this must have been in mid-October, maybe if Spinner is still in this site. I mean, he walked this thing up. I bet you this. I don't know if you have your pro up, but there must have been a buy recommendation sometime in like mid-October, and this thing absolutely caught fire. Nearly got to $19. Now, once again, I'll try and make a bullish scenario here. You do have a potential double bottom here. The lows of the last two sessions. Spoos are perking up into. Do you got that? Do you got that upgrade? I can almost tell you the day.
I see it. I see it in the chart. I didn't see it on NCLH, so it might have been on Carnival. Let me go check Carnival calendar, analyst ratings.
It might. Was it? Man, I thought it had a big move that day.
I can see it in the chart on October, right where you're saying. There's a big run up. Here we'll go to daily.
What? Yeah,
October here, October 11th.
11th.
We hit lows of like the 6th and then ran all the way up. This is Carnival, not NCLH now, but you can see that run here. Let me go over to SPY real quick, Joel, because it did look like we were popping there.
Go to NCLH real quick. Go to NCLH and let me tell me when the last upgrade was. It might have been it was in October too, maybe October 17th, maybe October 11th or October 17th. There was an upgrade, I think.
Yeah, I'm not seeing one in pro, but that doesn't mean it didn't happen. It could be a pro problem.
Okay.
Yeah.
All right, Spoos got up to the high. Man, it's just sticky up there, and this is kind of what we alluded to this morning. It's
wait, Joel. I'm sorry. October 12th from UBS. Robin Fairley, upgrades to buy prior parts. Or no, wait. This is.
You're right.
Upgrades from neutral buy, but lowered their price target from 18 to 15. But still, that was on pretty much on the day there, October 12th from UBS. Upgrade. I've never seen that before. An upgrade, but the price target was lowered.
Oh yeah, they do that. They do those tricks all the time.
Man.
Yeah. Yep. And that day it went from 1163 to 1298. It paused. And then it went on. Now you had some market forces helping you too, right? The rally off the October low. But and that's another thing for I don't know what kind of crowd we have here on this. It's not Christmas Eve. It's not Christmas Eve day. It's pre-Christmas Eve day. analyst ratings, and if you guys listen to the morning show, we talk about analyst ratings. They can have an effect both ways. So it's tripping. We'll maybe next week or in the new year we'll have Triple D. He has his formula for like an upgrade from Morgan means this, and an upgrade from Goldman means this, and an upgrade. There's different houses that specialize in different sectors and move more stocks. Haven't heard much out of Goldman Sachs lately, though. I know they've made some macro targets here, but we're at 351. Maybe we got a little buy imbalances here. I don't have that up in front of me, but we're getting a little pop in the S&P. They're trying to get through that high of the day, 72.50, the intraday high from yesterday. And what I mean by intraday high is the high that's made between 9:30 and 4 o'clock. The levels that I give you guys during the show encompass that 6 p.m. open at night all the way until I even look at the price action for that last print at 5 p.m. They stay open for an additional hour. All right, where are we going next?
So let's talk some China real quick, Joel. We've got about 8 minutes left. So we'll talk China real quick, pulling up the K-Web ETF down about 2.7% today. BABA down about 3% as well. Essentially, COVID cases rising a little bit faster in China than expected, causing some fear for some investors. Is this worrisome to you? Are you touching any of these Chinese names? What are you seeing?
I mean, once again here, it's a continuation of what the trend has been for the year. Now, I see a couple green candles in K-Web and, on the monthly, so that it's starting to perk up a little bit. But not to be callous here, Aaron, but the market's more concerned with COVID deaths. It really is. Broadcasting through the pandemic with Dennis and Spencer, the number of cases, the hospitalizations, but when people are checking out, when people are dying, that's where now, because, cases can be anything from,
Omicron.
a mild contact or whatever. But if they start flipping over and dying, not to be callous, but I will be. I mean, that's what they're concerned about: deaths. Cases are cases, but deaths are deaths.
Is it not? I mean, am I being a little, I guess like silly here? Is this not a little, I guess is the market being silly, or am I being silly for thinking this is silly? That it's saying, look at our whim here. Shares of Chinese stocks are trading lower amid an increase in COVID-19 cases after the country recently eased its zero COVID policies. So we're going to rally because we're easing the COVID policies and then bring those stocks down when people start getting COVID. Is that not a foreseen thing that was going to happen when China starts rolling back some of these policies?
The China card, I mean, earlier in the week, Mitch, brought up some information about, some warplanes and everything. I mean, that's just a wild card in the market, when you're investing in all these markets, especially over, a 3-day weekend. We have seen a lot of different things happen in the markets where, I'm not saying any other countries or, do things, but a lot of things happen over 3-day weekends. And, that's one. Now, besides, rising interest rates, besides recession fears, it's a concern, the macroeconomic environment. I mean, if Putin, I saw something, oh yeah, it's time to go nuclear. I mean, there's nothing I can give you the most bullish setup in the world in any stock. And if ICBMs are whistling over our head, the SPOOs are going to be down limit. I mean, that's just, nature of the market.
I don't know if this is Santa finally coming to town, Joel, but looks like the S&P 500, where I'm looking on a 2-minute chart here, we are trying to break our highs of the day. And no, we couldn't do it with 3 or 4 minutes left of trading. We tried to make new highs of the day and could not do it. Got rejected. Look at this, Joel. 1, 2, 3, 4, 5. The 6th time we've tried to clear this, we'll call it a 383 level today, and have been unable to. I don't know. It doesn't look great to me, Joel, but I guess on the good news, we're at least, it looks like we're going to close toward the high of the day rather than toward the low of the day, right? That's good news.
It's so funny because Money Mitch, when we look at some of these charts and it's like pressing up against the top, pressing up against the top. He's always looking for the press higher, and you and me were like, whew, well, man, we can't get through resistance. Oh man, we're doomed. It's so funny the way that like some of these charts that he looks at, like, yeah, that looks bullish, and I'd be like, man, if I own that thing, I'd be selling it as fast as I can. So, what you're running into here at the close is, well, you have the current high at 72.50. You had the intraday high at 75 and a half, right? So right in this area. So that spider high should line up very closely with that. But what you have to keep in mind here is we're trading at 39.70, right? Our low, we are trading 80 handles above the low that we made late yesterday afternoon. So these algos, the shorter term, not even a shorter term trader, if they picked it up on the cheap yesterday and they were hoping for a Santa Claus rally today, their targets are getting hit. They're taking the money off the table and they're not going to worry about it over the weekend. So we have had a sizable move up off that low from yesterday afternoon. I think you're just seeing some short-term profit takers, and then we'll see. We'll see what happens into the close. I have a feeling that we might bust through that 72.50 before the end of the session, but not much time left to do it. What else you want to cover in the remaining couple minutes?
I don't know, Joe. I mean, we've only got a couple minutes left, so if anyone's got anything in the chat, I was just going to say one more point. To your point here, the more I see us hitting that kind of resistance, the more I respect it. It's almost like the wall is more stronger the more times we hit it and reject it. But I will say, and this might be kind of to Mitch's credit, I am someone who, I don't like when people act as if because there's resistance up here, the stock's not going to break through it. Because that's what the market does, right? When the market makes new highs, when it's in a bull market, right, you're always taking out the previous support and resistance. So to act like that doesn't happen quite frequently in the stock market, of course, right now, it does happen way less frequently in a bear market that you're taking out those, highs and support levels. So I start kind of trusting those, not support levels, those resistance levels a little. I trust those a little bit more in a bear market, whereas in a bull market, they're like, running through a piece of paper, like when they got the football players with a big banner and they run through it before a game. That's how those resistance levels are in a bull market. In a bear market, they're like a brick wall. You can't run through them. So
that's
right
a good
now,
point. I like that. That's a very good point. And there's no doubt that this has been a bear market for 2022. I guess just being on with Mitch and Dennis so much and their bearish slant, and it's so I don't know. I would like to even be even though I'm kind of, some people may call me a perma bear. I just like to take the other side of the coin there. So it looks like our last print there is going off at right around 38.70. Pretty good day. You do have some after hours buyers here trying to push it up through that high. So a good day, which is the first day of the Santa Claus rally. We got a 3-day weekend coming up, folks. So the most important thing, you can have a lot of money in your portfolio, but most important thing is being with your family and friends at the holidays. So enjoy. You stay there warm in St. Louis. Are you coming back? You're not coming back until after the new year, correct?
Correct. I'll be back in the office. We're going to be closed, whatever the New Year's Day celebration, that Monday, and then the following Tuesday, I think the 3rd, I think January 3rd, that Tuesday, the market's back open. I'll be back in the office. Excited for that, Joel.
Okay, and just real quickly before I let everybody go, I just want to preview Tuesday's show a little bit. We're going to do something a bit different. We've had a lot of requests over the years to do some more extended broadcasts in the morning. I know there's some other things on Benzinga, but Dennis and I have been in the works here. And so on Tuesday's show, it's not going to be my last show of the year. My show of the year is going to be on Wednesday. But I just wanted a little teaser here so you guys don't sleep over the entire weekend. Here's our lineup, which is subject to changes. This is Tuesday off the 825. Chief Market Strategist at Carson Group, Ryan Dietrich. 835 to 845, the one and only Todd Gordon, founder, New Age Wealth Advisors. At 850, Cameron Dawson, Chief Investment Officer at New Edge Wealth. Actually, I should keep those two on together and figure out who copied whose name. At 905, we'll bring on none other than the top analyst on Wall Street, Gene Munster, managing partner at Loop Ventures. We'll do some live coverage of the opening bell. I'm never on for the open with you guys. You get to hear some live calls, what's going on. 950, Michael Pachter, equity analyst for Wedbush Securities, video games and technology. Also, if you're hanging on to that ATVI Microsoft spread, I know Mr. Pachter will have some comments on that. Triple D will return at 10 o'clock, return with his observations from the first 30 minutes of the session. 10:20, Christian Fromhertz is going to join us, founder, a frequent guest on the show, founder and CEO of Tribeca Trade Group. 10:35, Craig Johnson, managing director, chief market technician at Piper Sandler. 10:45, the one and only director of operations at Benzinga, Luke Jacoby. And then rounding it out will be my buddy Rob Friesen from Stock Odds, who's going to give us some interesting statistics heading into the new year. So I just wanted to alert people to that. You be safe out there, Aaron. Great job again. Great, safe, long weekend to everybody. Back on Tuesday.
You as well, Joel. Enjoy the weekend and happy holidays to no matter what you're celebrating out there. But Joel, that sounds like a fantastic lineup. I'm excited for Ryan Dietrich. But guys, peace and love, y'all. Happy weekend. We'll be back next week. I won't be around next week. I'll be down in Florida. But the week after that, I'll be back in Detroit, kicking it like normal. But guys, smash the like if you have not already. We'll be back soon.